You've been on the board for 5 months and chairman for 3. What have you been focusing your efforts on so far?
Well, the thing any chairman has to do is firstly understand and appreciate the views of shareholders, and secondly be comfortable that the management team and the company is delivering what it's supposed to be able to do. So in the first period running up to the AGM, I spent a lot of time with shareholders, met a lot of shareholders, and I think I have a very good appreciation of what they're concerned about and what they're interested in. And since the AGM, I've been able to spend more time with the senior management team and get around the company.
The plans for the company outlined in the release show few changes to the previous strategy and rather a realignment of responsibilities internally. What makes you convinced that this will deliver the best value for shareholders without something much more fundamental?
Well, I think actually the organisation that Norbert's announced today is actually pretty fundamental, very fundamental. Looking at the company and the way it was organised before, it seemed to him and to me and the board that there was not the direct focus on the customer that had actually been the company's success in the past. Too much of the decision making got slowed down by the complex matrix we had. So clearing the lines and getting the senior management team organised this way will lead to further changes which will get the customer connection back with the company where it needs to be. And this is important because growing revenue is the heart of our future success.
But there have been calls for a more radical breakup, for example.
Yes, there have. But look, in whatever the scenario, it is critical that we get the best out of our assets. And that's what this is about.
Does the complexity of the regulated and regulating markets throw the strategic focus on these markets and the volume to value strategy into question?
Look, we have to live with the world the way it is, and the world is increasingly regulating. It's not that we don't raise our hand and argue when we think that regulation is inappropriate or disproportionate, but we are living in a regulating world. And in that world, the value of a customer that we acquire in a regulated market has many years profits coming from it, whereas the customer we acquire in a non-regulated market may not be with us for very long. So the point about the volume to value strategy is that we're focusing on acquiring new customers in the regulated and to be regulated markets. And that's not to say we're walking away from the non-regulated markets, it's just to say we're not spending valuable dollars recruiting customers there.
In the release, you say the new structure may offer further opportunities for the business, including the option to create value through alternative corporate and/or financing structures. Can you be more specific about this?
Let me give you an example here. The US is a very good example. The US we've set up with its own technology platform. This is a business that in due course, with the market opportunities it has, may benefit from having additional capital brought into it. So that's the kind of thing we're talking about.
Are you happy with the shape of the board? And how are you getting on with Spring Owl, your activist shareholder?
Look, first I have to tell you that all our conversations with Spring Owl are confidential, so I can't say anything specifically about that. But what I will tell you is the board is working very hard, the board has good dialogue, the board is on the case of what we need to do. We are, as everybody knows, making some additions to the board in due course, and some retirements have been announced. We're not in a position to make any announcements today, but we're seeing some very good candidates, and at the right time we will make announcements about new directors. But let me emphasise, the things the board has to do are not waiting for any changes on the board.
Following Amaya's acquisition of the Rational Group, which owns PokerStars, the release states that you intend to play an active role in any further industry consolidation. Do you see bwin.party as a consolidator or a consolidatee?
Look, we have no preconceptions. The reality is many other people in the industry are under pressure, and industries that go into this period of pressure normally end up changing in some form or another. Now that was true before the Amaya Rational Group transaction. In that scenario, the lessons from my own personal history is that what you do is two things. Firstly, you focus on your own business to make sure that you're getting the best of it. And we have some great businesses, some great brands, some great technology. And secondly, you do your homework and figure out how that shape can be beneficial, that change in the industry, beneficial to your own position. But let me not get ahead of ourselves. Changes in industry sometimes take a number of years, but that's how we're thinking about what's going on.
So you've increased the dividend again, but until revenue stabilises, how can you be confident in your future prospects, especially with PokerStars becoming more active in casino games in Europe and Germany licensing sports betting?
PokerStars must run their business and we must run ours. It's absolutely clear that we have to perform better, and by performing better we'll be able to grow the share price, grow our dividends and all the things our shareholders want us to do.
This is supposed to be the year that you return to growth, but it's not looking good. When do you expect revenue to stabilise and return to growth?
Well, when you look at the numbers overall, this is the impression you may get, but we have made considerable progress in all of our focus areas. So, for example, on sports, in our regulated and to be regulated markets, we have grown 14%, and against different comps, because we had to digest the entire loss of one big market being Greece. We grew our casino business in our regulated and to be regulated markets by 7%. We grew our mobile business very, very strongly, but obviously those were the key focus areas. So we did well in the focus areas, we didn't do so well in other areas, especially poker. So to return poker to growth will be extraordinarily difficult, but I'm very confident that we will actually return our focus areas to growth in that year.
The poor results and all the cost cutting must have had an effect on staff morale.
You would think a very negative one, very surprisingly, and you may see me here, I'm very confident right now because we have taken some very radical tactical decisions. So whilst we are keeping our strategy and pursuing our strategy, which we have set some years ago, we have made some radical changes in terms of our tactical delivery, and that brings oxygen back to the troops. So whilst we are taking tough decisions, those decisions are clear, they are being understood. And funnily enough, I believe that we will actually be much better as an organization going forward than we were in the last years.
Okay, now Germany remains your biggest market. What do you expect the impact of German sports betting licensing to be on group revenue?
Well, the big question will still be whether those new licenses will be issued or will they not be issued. And actually, there was an important meeting in the middle of this week where the 16 Länder in Germany may decide to issue the 20 licenses. We don't know the outcome yet, but we will know in the next days and obviously then have to react accordingly.
Now, the US appears disappointing to date, with the New Jersey market appearing smaller than predicted and California, Pennsylvania and New York failing to address their licensing bills. When will other states open up, if at all?
Well, first of all, we all knew that the entry in the US will not be a fast thing. So New Jersey is just the first state for us, and you're absolutely correct. The size of the market is substantially smaller than we initially expected, and there is another surprise to us, namely that it's predominantly a casino market. 75% of New Jersey's market today is casino, and only 25% is poker. So having said that, it is a positive first step back into the US. We are now completing our license application in Nevada. So Nevada again being a small state, but we expect to launch there in 2015. And then the big question, obviously, as you asked, is what are the next states to come online? And that is a very difficult one to answer. We do not, obviously we know it's not going to be 2014. We would think that in 2015 there will be maybe one state, possibly two, enacting legislation. That means the earliest we will be operational in new states will be 2016.
So coming back to New Jersey, are you prepared to cut your cloth accordingly?
Well, that's what we are doing all the time. We always have to react to different market circumstances, and that's something we will do in New Jersey as well. It's still, there's still expectations that the market will grow, especially once the customers will have it a bit easier to sign up to the sites. The payment processing and payment acceptance rate is being improved. The mobile offer can be completed, which we are doing right now. So I do expect that New Jersey will grow, but obviously the market is still substantially smaller. So we really have to adapt to that new reality, but we are pretty good in doing that.
Is there anything the company can do or you can do to reverse the decline in the online poker market in Europe?
Well, poker is the most difficult segment of our portfolio, clearly. It is today only 14% of our revenue, so we are not depending on poker anymore. Yet in our focus markets, it's obviously a declining product proposition, and we have to face that reality. So it will be all about having a proposition to the customer where you are at least one of the top 3 operators. If you are successful in doing so, you can even make some money in poker, but obviously it will not be a growing proposition going forward.
So could you envisage exiting poker in Europe and concentrating on sports betting, casino games and bingo as part of your new focus on the bwin brand?
I think exiting would be a bit too harsh. We have been focusing already behind the bwin brand and predominantly on sports in Europe. That works, and we are seeing some early successes there. And then obviously from sports you will be able to cross-sell into casino, into poker. So it will be still a product which we'll be offering, but obviously we have defocused poker heavily.
Mobile and touch are key to your growth. Are you happy that you're doing enough to keep up with your competitors?
Well, first of all, we are a bit different than our competitors. We have a very diverse geographic footprint. We do not have a benign home market, which we have been suffering from for quite a long time, but we have made huge progress on our mobile offer. In sports now, I give you just a data point. In June, in Spain, we had 51% of our revenue coming from mobile in sports. We actually have a market where we did 84% of our revenue already in sports in June of that year, being the UK. Now, UK is a small market for us, but it gives you already some kind of impression where we will be in a year from now. So, whilst in sports we are doing well, and we will continue to do well in sports, we are now closing the product gap on games and on poker as well. So I'm very confident that actually on mobile we will be not only where our competition is, but we should be able to exceed our competition. And it's something I'm very much looking forward to.
And do you believe that your technology operations, now labelled bwin.party Studios, can handle the many requirements across business, markets and platforms fast enough to be competitive?
Well, yes, there's a clear yes, and the reason is very simple. We have completely focused now on very few deliverables. Whilst we tried to do everything in the past, we are now trying to do only a few things, but do them really well, and giving a real identity to our product and technology organization by now not only calling it bwin.party Studios, but by enabling to become the organization they always wanted to be. Because in the past, we were like a mixed basket. Are we a marketing company? Are we a product company? Are we a technology company? And that was very confusing. And by focusing now our technology organization, giving them this identity, we are already seeing some quick wins over the last weeks, while they are just getting out product much faster and stability is better. So yes, I'm comfortable that we will be again making as we are making big progresses, that in 2015 we should be actually where we wanted to be.
You say that you plan to foster more B2B relationships. Can you perhaps be a little bit more specific about that?
It goes back to the question you answered me before about bwin.party Studios. So obviously our product and technology organization is servicing our internal marketing organization, being our brands, already as a B2B organization. So as we are building great products, there is demand from other customers for those products. And what we are doing currently is we are just taking temperature in the market. So is there demand for a bwin type sports product in the market? And I do believe there is. And we have indications that some bigger players are really interested in taking their product from us, and we will then make a decision on whether we are delivering that product to them. So yes, again, it's a potential area of growth for us, and there are certain markets where you cannot enter B2C, and there we will enter B2B.
Clean EBITDA is looking pretty sad across all the businesses, except bingo, where it was saved by cost cutting. Can you summarise perhaps the key movements?
Yeah, sure. The key movements year on year in clean EBITDA were basically the loss of Greece. That cost us around 9 million euros at the EBITDA level. Then we had the investment in New Jersey, which was launched in November last year. So we had an operating loss of 7.3 million euros in the period. The continuing issues in the poker market cost us another 9 million euros in the period. On top of that, last year, if you look at the comparative period, we had an exceptional level of domain sales, if you recall. So we had 5.5 million of domain sales, which weren't repeated this year. And then on the other side, we did generate cost savings, as we had set out earlier on in the year, that we had targeted 20 million euros of savings. and you see that we already at the half year delivered 13.8 million euros of savings. So they were really the main movements that we saw.
Now, you've identified even more costs that have to be cut. Can you give us some more detail?
So as we set out at the beginning of the year, most of the cost savings arise from administration costs. We gave a target of 20 million euros at the beginning of the year, and we've subsequently increased that target to 30 million euros before the incremental costs associated with the acquisition of Servbase, which incorporates PXP solutions, which took place towards the end of the period. We've also announced today that we think that we can achieve a further 15 million euros of cost savings in 2015. And again, most of these savings will be coming from administration costs, so costs such as staff costs, outsourced services, overhead.
You mean these cuts aren't going to impact upon core business?
Well, we actually hope so, in fact, because the reason that we're making the changes that we outlined in the press release today to the organisation structure, it's not just about cost cutting, it's actually to improve the speed of decision making and execution. And effectively what we're looking at doing is delayering some of the company and removing some duplication of costs that we have through the existing vertical structure. So we're actually looking for really a dual benefit of improving execution and reducing costs.
Should you not, though, be spending more on marketing to support your key brands, especially considering the increasing competition from the likes of PokerStars?
Well, again, I mean, most of the savings that we've made, in fact, all of the savings really that we've made in the first half have come from administration costs. And if you look at our marketing costs, they are actually up year on year. Further, if you look at our marketing as a percentage of revenue and compare it to our competitors, then it's very much in line with what they're spending. So we are really trying to make ourselves more efficient and not simply cut marketing in order to achieve EBITDA growth.
When will it be time for you to invest in growth again?
Well, bear in mind that we are targeting our investment in sustainable markets right now, and we did see some nice growth in those areas year on year. Sports, for example, grew by 14% in those markets year on year, and casino grew by 7%. Poker, we know the issues with the overall poker market. Unfortunately, we did see a market decline there. And also, to be fair, our own performance could have been better, I think, in that area. Bingo was relatively flat, but again, that's down to a very competitive market ahead of the potential introduction of the point of consumption tax in the UK. So we're certainly prepared to invest. It's just a case of where are we going to invest? And that is the sustainable markets that I've just mentioned. We're also looking to invest in areas of the business that will create optionality. So Calixa is an area that we're investing in. Of course, you've seen from the release today, we're investing in our US business. And on the technology side, we're also looking to create a new B2B organization that, as well as servicing our own B2C businesses, can also serve third-party customers as well.
Given potential industry consolidation, apart from the dividend, should we be expecting you to hold on to free cash?
I think that's a reasonable assumption, other than share buybacks, where we will look to finance those through the proceeds of the disposal of non-core assets that the group holds.
How much are we talking about here?
So excluding any potential proceeds associated with the disposal of Calixa, I would say a range of around 30 to 50 million euros of proceeds are expected.